Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning. Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments in your retirement right here on the Max Out Savings Show. Our show is all about building up wealth and understanding the world today, understanding where we're going, understanding what we're dealing with, and what's happening. We probably live in one of the most rapidly changing times, I think, in my lifetime. Maybe if you go back to the 1960s, which I was alive then, but you saw some of this type of stuff. But it's truly extraordinary movements across the board, across the globe, markets gyrating, presidential elections, wars, 2-3 wars out there. You just have things constantly moving around. Without a controlled government spending, we $1 trillion every 100 days. It's just. Oh, by the way, I'll just repeat that. We've been borrowing an additional $1 trillion every 100 days. Maybe it's up to 120 days now. And the most remarkable thing about that is that in this situation, what we're dealing with is we're in a presidential election. That's not even coming up. Nobody is being asked at all about what are you going to do to cut this out of control spending. It's not even a question mark. Our deficits are running. We're borrowing about maybe 6.5%, 7% of GDP every year. Basically, in peacetime, unemployment's ticked up, but for a while, employment was under 4%, and here we are running up these huge deficits. It wasn't really wartime. It really wasn't a recession. There wasn't 8% unemployment. They had to help the people out. This is just, hey, the candy store's open. We get to spend as much money as we want. And so it's truly extraordinary. So we know everybody has a bad feeling about this. Everybody knows this is not going to last, and it's going to affect your retirement, your retirement assets. It's going to affect the quality of your retirement life in the future. And the question is how, and are you going to protect yourself from that happening? And I think that's going to be the real key in here, is you have to protect yourself. The average person, they retire at age 65. I have no intention of doing that, but a lot of people do. And 65, I've seen some numbers. One of you has a 50% chance one of you lives to be about 91 years old for a married couple. And honestly, that was probably 5, 6, 7 years back. It's probably 93. It's gonna be so you're looking at 25 years of retirement. You've got to fund the money you save. You have to fund for retirement. Now, you get Social Security, which is a good thing, but the bad thing about Social Security is they pay you in U.S. dollars, and U.S. dollars are depreciating every day. Then you're like, wait a minute, so we're borrowing an additional $1 trillion every 100 days. It's like, wait a minute, that means there's $1 trillion more of those dollars, which makes my Social Security dollars worth less. And so we have this massive inflation, and quote, the inflation is down. I think it's at 2.9%. So inflation is, quote, gone away, which means prices went up 20-something percent, but now they're just going up 2.9%. So actually the inflation never actually happened. You're like, wait a minute, have you been in the store lately? But it's more important than that. And look, everybody knows that these inflation numbers, I've seen all types of numbers. They're at least 25 to 50% too low through hedonic adjustment, through changing the system, whatever they could to do to reduce inflation with the government. And so when you're having to deal with this, you're having to deal with this changing world. It's how do you navigate through that? And I think there's a way to do it. Look, for the past 10 years, it's probably dump all your money in the S&P 500, and it's market cap weighted, which means the biggest stocks are going to go up. And since basically 7 stocks are going to basically control the whole U.S. economy, and all the growth is going to be there, you're going to make money into infinity. And that's clearly failing. And now we have inflation going up, which damages PE ratios, even though it didn't seem to damage these PE ratios. You have inflation going up, which theoretically damaged PE ratios, but that didn't affect it. And it's reached the point now where you can actually look in the Nixon tried price controls that were utter failure. It was actually Rumsfeld that actually was his economic advisor and put him in place. And Rumsfeld said, look, these things. Years later, they asked him. They said, look, they flat out just didn't work. They caused shortages. Price control. That's like the Soviet Union, when the old Soviet Union used to go into the store and there'd be like whole aisles loaded to bread, but there was no milk. There was no butter. It was just stuff like that, because people aren't going to produce if there's price controls in place. And yet here comes Kamala Harris, or Camel, whatever the hell her name is, coming up here with this stuff, and it's like everybody's like, yeah, that might be a good idea. Why can't we try communism? It's like, this stuff is utterly failed. But the bizarre thing is the stock market had a great week this week. I mean, it was the biggest in a couple of years, and so things went pretty well here. So you're like, hey, maybe we should try more price controls every week, and the market will go up even more. And so this kind of defies logic. I mean, the market was up 3.9%. The S&P 500 was up 3.9% this week when the presidential candidate, which some people are saying leading the polls, is, I'm going to introduce price controls, put higher levels of government central planning in place. Somebody please show me a stock market on planet Earth throughout the history of the world that has ever profited from price controls and government intervention everywhere. And yet here we are. And it shows you that something is not right here. If you look at these markets, it's a good week. You're like, hey, this is great. But look, any normal market in the last 100 years, the minute some presidential candidate who is in the lead according to some polls, I don't believe it, is going to be instituting this new socialist agenda, and this is going to lead to euphoria in the stock market. Yeah, to be fair, that's probably correct, because what that's going to lead to is going to be hyperinflation, which means the stock market's going to go up to 1 million. The S&P 500, the Dow, to $1 million. Now, no one's going to have anything. You're going to be wheeling in a wheelbarrow full of dollars to sit there and buy a loaf of bread like you did in Germany in the 1930s. But something isn't adding up here. And what I want to do is bring some of this back here so you can understand what's going on. A couple things. What have we been saying on the Max Out Savings Show, in the free Max Out Savings report we sent out? This is election. We're in the election season for President of the United States. This, every year you hear, this is the most consequential election in U.S. history. No, this one we got a choice. We're going down a path of complete destruction of the United States and possible breakup, or we're going to sit there and try to bring things back to normal, to more of a free market capitalist system, democracy that has been so good to the United States and basically for almost 250 years made it the shining light in the world. Kamala Harris wants to take it in an utterly different direction. She wants to take it along the lines of the European socialists, the communists, China. But I'd like to apologize for China, because that's an insult to China. Because these people are so nutty that it's truly extraordinary. And you know, the communist Chinese at least plan things. They try to put the best people into positions. They try to build things. They try to do things, you know, to build. You know, they build out rail lines all over the place. You know, you can complain about what they've done, but it is kind of what it is. And by the way, please excuse the background noise. We're still under construction from the repairs from the hurricane. The borough that came through here, so we've got workers throughout the house in the downstairs. I'm upstairs now, but. So what we're dealing with is the Chinese. You know, they build out railroads. They do things. You know, they build out cities. You might not agree, like, hey, you built way too many buildings, building homes, and now there's like a surplus, and it's. But it's like we do. Yeah, Kamala Harris is like, I'm going to be the same thing as the Chinese. We're going to build 3 million. She goes, look, we have a housing crisis in the United States. So her solution is to build 3 million houses during her first 4 years. Hey, wow, why shouldn't I vote for that? That's a good deal. We have a housing shortage. Young people can't get into housing. Housing is expensive because there's not enough housing. Well, I think we need to go for commitment. But then you look and you go, wait a minute, wait. Weren't you the people that were going to build out 500,000 charging stations and spent $7.5 billion and have like 8 charging stations built, literally? It's like, weren't you the people that spent $50 billion on internet build-out in rural areas when you could have sat there basically given people the Starlink systems for probably 1/10 of the price and saved you know, tens of billions of dollars? I mean, everything they try to do turns to crap. I mean, it's truly incredible. I'll just repeat it again. $7.5 billion for charging stations, 500,000 charging stations blanketed in the United States. They have 8 built. And actually, you know, one of my kids actually invested in ChargePoint. She goes like, Dad, what do you think of ChargePoint? I said, well, I don't know. They're spending $7.5 billion. They're giving these things out. That should be a pretty good investment because, you know, they'll be giving them some grants to build out these stations and they'll make a bunch of money. ChargePoint is going straight down. They didn't get any money. It was going to all this favoritism, all rules and regulations and just incompetence, and they didn't get any money and no charging stations were built. You have to understand these people fail at every single thing they do in the Democratic Party. The people, you know, go on to the old line Democrats like Bill Clinton and that group, you know, Jimmy Carter and an engineer, replaced by a bunch of clowns that don't know what they're doing. Kamala is going to reduce regulations also to help out building. She was responsible for putting the regulations all over California so you can't get anything built out there. I mean, she's like the arsonist that burns down the house and then shows up with the fire truck and claiming she's going to put it out. I mean, it's like, but understand, in this world, we live in a very different world. We live in a world that could destabilize very quickly. We have a person that is putting forward clearly socialist agenda. Her father was a communist professor at Berkeley or Stanford. I mean, it's not like her vice president pick. She has all these pretty decent people on the Democratic side. Yeah, they're Democrats, but they weren't bad. And she picks the most liberal guy, this Tim Walz guy, this loon out of Minnesota, you know, who's left of her. And so understand, these people have an agenda. And people are like, well, no, she's going to be better. No, when people tell you, let me tell you, you don't listen to anything, and I've said this a couple times. Understand this when it comes to politics. When people tell you who they are, believe them. And I think one of the reasons she's doing so well in the polls is Kamala tells these people exactly what she's going to do, but they don't believe it. She tells them who she is, like, no, she can't really be like that. No, she is. And so understand that. So we're living in a world where there's a lot of outcomes that could not go the way to support your retirement plan, your retirement assets, and quite frankly, your standard of living. And you need to understand that. We're going to come back and try to go through some of those so you can understand what we're dealing with in today's world world. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-672-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now at maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. And also we want to thank one of our other sponsor of ours. It's Rangoni Alto Gin. It's a fine botanical gin from the mountains of the Italian Alps, and made with the finest ingredients across the board, completely organic and pure. It was just selected as the number one Italian gin in the gin spirits competition in London, which is the most prestigious one for the gin. It's called Rangoni Alto Gin. You can recognize it because they have the kingfisher bird on the front of the bottle, and you get a total wine and specs. So if you want to try something new with outstanding flavor profile, more almost to a very fine wine, try Rangoni Alto Gin. Now, we're just talking about some of the things with the number one, as we've been saying here, is right now the most important thing in the world is the United States election, and it's not just you need to understand the country is being run. The Biden administration is in power. To be fair, if Trump was in power, they'd probably do the same thing, but not quite to the level these guys go. But so everything is designed to come out to give you a narrative that, hey, the economy is good, there's nothing to see here, things are fantastic, inflation's going to zero, the deficit's going to zero, there's going to be a chicken in every pot, and it's going to be wonderful. As a matter of fact, everyone's going to get a free house. And so this is why for instance, we got the retail sales numbers came in this week. They came in up for July, up 1%. That's a pretty huge move. They were down 0.2% in June. So, again, these are kind of estimates they give, but you're kind of like, yeah. And Walmart's numbers came in. They're not seeing stuff. Well, Walmart is pressured to say things are good, but every other retail out there is telling us that the consumer is slowing down. The travel companies are telling us the consumer is slowing down. The furniture companies are telling us the consumer is slowing down. The auto companies are telling us the consumer is slowing down. If you look at the manufacturing, the PMI numbers, they're in recessionary modes. So clearly, the economy is slowing down, but they want that 1% number. The economy is good, nothing to see here, because that narrative is so important, because they want you to sit there and they want you to vote for Kamala Harris, and so the jobless numbers every single time they've come back the next month and they've had to revise them lower than expected, and the jobs growth every single time, because they continue to spin this narrative and then they go correct it later on after you've seen the headline up 1%. You go, wow, the economy is good. But that's not what we're seeing. That's not what we're hearing in earnings reports. That's not what we're hearing from the companies. That's not what we're hearing in inventory. Nothing is saying that. We're starting to see a slowdown. The stimulus money is running out. Credit card debt is going up, and this is. And so again, this narrative. Look, it's 80 something days to the presidential election. I mean, it's going to, quite frankly, within a month. Some states are going to start early voting. I mean, it's 30 days till voting starts. Probably after the election, we've got the the Democratic convention this week, and so we're on to the races. They want everything to look as good as possible, and so look, it's very suspicious that the market has a huge correction and plunges down, and the Japanese market drops the biggest market crash since 1987 for it, when the yen carry trade starts imploding, and yet the market is up 3.9%. The S&P 500 is off 8.5% off the bottom. So you're like, Ted, well, see, there was clearly nothing to see here. It's like, look, we're right back up to where we were almost. And so a couple thoughts on that. Number one, when you see something like that happen, and when you see that type of dislocation, that's like turning the light on in the kitchen and a couple roaches go scattering all over the place. There's a lot more roaches than that out there, and this is the situation. This is why you never want to see any roaches there. But this is, when you see an event like this, they tend not to be one and done. They tend not to be over in 1 week. It virtually never happens. It was swept under the rug. We've got to keep the narrative going. We have to keep everything up at least to the election so we can get Biden elected. And if the economy goes to hell and the stock market goes to hell after the election, we don't care. And so what happened? Why did the market go up? A couple things. You had a number of people get short the market as it started plunging, like, oh, my God, this doesn't look good. They were squeezed going up. But if you look at some of the numbers, Goldman Sachs had some information. The stock buyback programs after that pull, the companies were buying back stock at the rate of $5 billion a day. This is over 2 times what it's been in the past. So what happened when the market fell down? They started calling up Goldman Sachs, and these guys are all liberals. They're all liberals at Google, Apple, Facebook, Microsoft, the whole pack of them. Like, hey guys, we need some help. The market's in trouble. Could you increase your stock buyback? Oh yeah, we'll do our part. And so they start buying back huge amounts of stock and squeezing the people that are short and pushing the market back up. And so this was an artificial move back higher, we believe. And could it go a little higher? Yeah. Could it go up for the next couple of weeks? Sure. But this was a false move up. It's triggered by companies buying back stock because a couple of them thought it was cheap. Hey, the stock's down 20% or 15%. We should buy more. But it's right back. In many cases, they're kind of back closer to where they were. And the problem is that demand is going to start waning and going away. And a lot of people that didn't get out before, like, what do I? This is my next chance to get out. And the question, and we'll say it again. Look, this week Kamala Harris laid out her event. She's going to be giving people $25,000 to buy a house, which is going to cause huge demand for housing. She's going to be putting price controls on groceries and other things. I mean, the grocery store has it's about a 1.5% margin. It's many companies have 8.5%, 9% margins. It's very low in grocery stores. It's the people that are making the money are the food companies that are just raising the prices. A lot of these people have taken advantage and just really pushed up prices. I mean, look, corporations haven't done the American people any favors. They've been very aggressive. But to be fair, the average corporation, all they're concerned about is profits for the next quarter, and they're run by the chief financial officers. So if they can raise prices up, they'll do it. And if they can fire workers, they'll do it. In the past, in the 70s and the 60s, you would never lay people off unless, hey guys, we're losing money, we have to do something. Nowadays, if the profit margins slip at all, they're going to start firing workers and jacking up the prices. But the problem is, a lot of these guys, their pricing are getting too high, and so people are naturally going to the store-bought commodities instead to save money. And so in the capitalist system, that's the way it works. People come up with new products to undercut these people. They're not smart. I mean, the shrewdest guy out there is Tito, who runs Tito's Vodka. He runs this fantastic vodka. He keeps the price down dirt cheap, and no one can get in and compete against him. And most if he owns the company, it's his company. He's like, hey, this is a golden goose. I'm not letting it go anywhere. If it had public investors, they'd be beating the hell out of the golden goose, raising the price of it, and then ultimately other competitors would come in on top of it. But that's not the case. And so what we're seeing is Kamala wants to put on price controls. Go look at the 1970s and see what happened. Look at the inflation levels. Look at the shortages. The point I'm trying to make here is this market is not going up because things are getting better. It's not going up because the economy is getting better. It's going up because they're pushing a narrative, and the Democrats are pushing companies to buy back stock to support the markets so they can be reelected. And these guys aren't missing a beat everywhere they go. I'll tell you another shrewd group of people that are taking advantage of this, the Iranians. Now, look. The Iranians are said they're going to go to war with us and the Israelis, and that's going to be it. But they're pretty shrewd. They know they've got Joe Biden on the other side. If there's a war in the Middle East, oil prices go up $100, $110 or more dollars a barrel. So if they hit the gas trains in Qatar, bingo for the U.S. gas producers. By the way, it's going to force up natural gas and oil prices around the world, triggering inflation. Well, even if they don't hit those trains, if they just, it's going to cause oil to go up and gas to go up. Well, they want oil and gas very cheaply in the United States, so the Iranians can make all types of demands on the Americans, at the expense of Israel, because they know Joe Biden and Kamala Harris. I mean, she is so sympathetic to the Iranians. When they were sitting in the Situation Room, from what I heard, they were going over what they were going to do about this war with Iran. They asked her to leave, and because I'm not sure you can trust her in that situation. So. But the Iranians know this. This is why we've not seen the war, because they're trying to stop. They're trying to tamp it down because Biden and Harris do not want a war right now that's going to upset the election and raise gasoline prices. You're seeing gasoline prices go lower in here, and so. But you have to understand, this is all this Potemkin village that's being built with the mainstream media out there to let you know that everything is great, everything is calm. Look at the price of gasoline. We're going to be putting price controls on the grocery store, so your price of all your products are going to be going down. Everything is a lie, and everything is to put in place this structure so you believe a false narrative. And so it's going to be the same thing with the stock market. Nobody cares if the stock market plunges after the election. And so the question is, does it hold up to into the election or before? And that's what we're going to have to see in here. But there are some things that should do well in this environment. A couple interesting things that came out of that, a couple lessons after the Japanese carry trade blow-up and I think this is important, that was a big deal. The Japanese stock market fell over 20%, the biggest decline since 1987. And it's come back up some, but there was an issue, and the markets are materially more illiquid than we thought. And this is something. Another thing that's come out is the narrative can change very quickly, and this is a very important one. What we're talking about here is the world could change very quickly. But Thursday, the market started going down. Friday, it got a little worse because the yen was strengthened, and then over the weekend, the whole thing blew up within 3 days. Look at Biden. Biden's doing fine in the polls. He's lagging, but he's going to catch up with Trump once he gets to the Democratic election, picks his VP, if it's going to be Kamala or not. And all of a sudden, a week or 10 days later, he's out of the race, and a shock to everybody. And we have Kamala and Minnesota Tim. You look at one minute Donald Trump is speaking up in Pennsylvania, the next minute he's shot, and by the grace of God, he was only very slightly wounded. But again, those are three things where you had massive changes happen very, very quickly. And so, are we going to get a war with Iran or not? I mean, they're trying to stop it because they don't want they don't want any issues here with the oil and gas. But that could change overnight. I mean, things could spiral out of control. What if Iran, if Russia or Ukraine hit one of their nuclear facilities, causes a radiation leak, somehow triggers a nuclear incident over there, or worse? That can happen overnight. There's all of these things. What if China invades Taiwan? I mean, the only thing holding them back is Sun Tzu's Art of War. If your enemy is destroying himself, let him. They're like, hey, don't do anything. I mean, I think the Chinese are probably going, hey, we could reduce our defense force in half because these people, they're just going right off the cliff in the United States. I mean, but all of these things, and that pains me to say that. I had several kids in the military. We supported the military, and to see what's happened to this country has been an absolute disgrace. What these people have done, and it's a threat to our standard of living and our children's and grandchildren's standard of living going forward if this doesn't change quickly. So all of these things, so things are changing very quickly, and we're dealing with a false narrative. The other thing that we're looking at too is that the markets are somewhat unstable with that. I mean, with the volatility, it's not just the down, but it's the up, massive upside buying, coming in. It's very unstable. Liquidity is not there in these markets. And the other interesting thing I'm seeing is we've had a huge real estate issue where most commercial buildings are worth probably 30-40% less than they were 4 or 5 years ago. Normally that would lead to some type of banking crisis. I think it's the same thing. We got the election coming up, and election's been coming up for year and a half. They don't want any problems with the banks until after the election. Again, the Democrats, and again, this isn't rocket science. Anybody should be able to figure this out. I mean, you want to create this illusion that everything is great, so you don't want anything to happen. So what I'm trying to tell you is once this election is over, there's going to be trouble. You can't keep spending $1 trillion every 120 days, borrowing additional, not spending, but borrowing additional amounts of money, and have the rest of the world pull back and not have an issue here. And we're going to, I'll tell you what, we're coming up here in a quick break, so I want to talk about some of the things. So one of the things we've learned is volatility has spiked out of nowhere. The other thing is that cryptos, which are supposed to be a big store of value, sold off 20-25% of that big sell-off as well. Bonds were somewhat of a stable thing, and the other one was the precious metals, the gold in particular, reasserted itself as the go-to safe asset in the world. We're going to discuss that right after this quick break, right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. A couple things here. We're just talking about some of the changes. What did we learn out of the yen carry trade blow up, which happened about 2 weeks ago? And what we're seeing is that a couple things. Markets can move very quickly. The Dow plunged about 8.5% almost immediately within 2 or 3 days of the S&P 500. The Nasdaq was down a little more than that. Very quickly. It went from about 17,000 down to about 17,700 down to about 15,700. The 2,000 points. On basically it's 11% within 3 days, and so things can go up pretty quick. It gave back everything it's made in the last 3 or 4 months. Really, it was down in actually longer than that. So it gave back 6 months worth of returns in 3 days. That means that your gains aren't a sure thing. The liquidity is not there. Bitcoin dropped over 20% in 3 days. So it really wasn't the store of value. The interesting thing is if you look at a couple things. If you look at bonds held their own and went back to being for the first time in a long time, a rush to safety. The other thing was government bonds. The other thing was gold. Gold fell down about a little over 4%, and then rallied back very quickly and has moved to new highs. And to me, that's a real tell in here that gold is signaling, it's concern of war, it's concern of inflation, and concern about out of control government spending and printing of money, and it continues to telegraph. So for the last couple of years, we've been hearing the store of value the whole time has been crypto. It's like crypto is the new gold. Don't worry about it. Buy the crypto, and that's going to be where you are. Gold is a relic of the past, and it's nothing to see here. If you look at Bitcoin, in the last, Bitcoin was trading right here in 2020, April of 2021. And if you look at right where it is right now in the 50,000s, it was. If you look at gold in 2020, it's trading about 20% higher. So it's held its own, and it's actually performed very well this year. It's performed very well, basically, against most asset classes this year as well. And so it's reasserted itself as the go-to asset. Central banks around the world are buying it. Chinese are buying it. Indians are buying it. Indians are buying silver too. And China's silver to the lesser extent. And central banks in India, in China, in Russia, in Poland, and other places are buying gold. And what fundamentally shifted is once the United States froze the assets of Russia that was in the central bank, countries around the world realized they couldn't hold a whole lot of strategic assets at the United States because they could confiscate them. And so the most reliable asset is gold, because you can move gold. It's fungible all over the world. It can also be moved clandestinely. In a world where there's sanctions all over the place, that's an important thing. And gold also can't be printed by the Federal Reserve. So these things look at. I believe the gold bull market this cycle is going to be driven by the Chinese and the Chinese public. They were the American public in the 1970s. In the 1970s, the Americans lost a bunch of money in the stock market. They lost a whole bunch of money in the real estate market, and then they started buying gold and they ran it up. Chinese have lost money in their stock market, which is looking very cheap, by the way, compared to the American markets, very cheap, and they're losing money in their real estate holdings, but the gold is working, and so I believe that's going to be the driver for this bull market. Now, a couple interesting things we talked about is if you look at the stocks, we've had earnings come out on the companies. They're all doing materially better than expected, and the valuations are still much better than many. If you look at the growth rates of these companies and you look at the PEs, they're actually pretty cheap compared to many companies out there. I don't think the earnings are really telegraphing the 25, have really incorporated the full $2,500 move in gold. And many of their other inputs haven't moved up as much, and so this is something that we want to see going forward. So we like the precious metals stocks. If you just look at them on a growth stock basis, and I think the whole commodity sector, because it's the commodities in general. Some of them are down. Copper down because of an economic slowdown in China and elsewhere. But you still have the build out of copper, of electric cars. It's going a little slower. You still have the build out of AI. All of this requires copper wires, wiring for generators, for charging stations, for electric motors for the cars. It's one thing after another. And so this electricity thing is a big long-term play. And if you look at it, I saw some numbers here from Jeff Curry. He's at Carlyle Group now. And he pointed out there's going to be $16 trillion in environmental spending this decade, which to put that in perspective equals all the spending in China in the 2000s. And so that's an enormous. Remember, that was a huge build out in China. This is a huge build out, so that's going to cause, again, that demand for copper, for aluminum, zinc, lead, silver. All those things are really going to are longer term. They're down some now, but they're still, this build out is still coming, and it still presents the opportunities. The United States over the last 20 years has put money into financial assets, into the financialization. The Chinese, the last 30 or 40 years before that, put money into industrialization. Now we're deglobalizing, which means we're reindustrializing the United States. So it's not just environmental stuff. It's that new semiconductor plant that's going in. It's that new plant building 155 millimeter shells. It's for the wars we're fighting all over the world. It's a new airplane, a jet plant. All these things are being built out. So there's a lot going on there, and it's going to continue to push. So this industrial and this commodity side, we think on pullbacks, you want to continue to kind of look in that area and build up for the next kind of move forward. And again, the Federal Reserve cannot print copper. They can't print gold, silver, aluminum. They can't print it. And so you want to be in things that can't be printed. And so this is something that we want to see. There's still talk about since interest rates are higher, dollar's holding up. I still think the dollar is going lower over time. I just think that the damage been done to the United States by the Biden administration on a prestige level, on a fiscal level, on a debt level, fiscal level. It has been in confidence level, and no borders, crime out of control. Who's really running the United States? Biden's clearly a vegetable. That's enormous damage that's done to the dollar, and people more and more are becoming concerned about what's happening. And so I think the dollar is going to go lower. That will be bullish for this sector as well. So we continue to like that overall. And I think we're going to continue to see that going forward. And so on pullbacks, I think copper's pulled back some because of the slowdown. And again, if you look at copper, it has pulled back some, but they still have the shortages. But that's got more to do with the slowing economy, which goes back into the economy is slowing to some extent. And so this is something to think about. And we talk about the damage done to the U.S. Let me give you some numbers here. The interest payments on the debt in the United States is about 25% of our revenue. Our taxes come in, so if we get $1, we got to give $0.25 to pay off the debt. Now we're AAA rated according to Moody's. S&P actually has us at AA+. A typical AAA country, that amount is 3.5% to maybe 6.5% of taxation is going to that. So if you really analyze the United States, we're clearly not AAA. And so this is going to cause problems in the future for us. And I think we've got to be cognizant of that. We're continuing to study we own a lot of government bond treasuries because they're very liquid. We're on a shorter end of the curve. We might make some movements even longer term. We're studying that. But the other side, I'm really trying to figure out where do we get out and do we increase higher level corporates or some other thing? Because if God help us, if Kamala gets in here or something else happens, you could see issues with the dollar. I mean, likely they're going to sit there and just print money, and the inflation's going to continue, and it's going to hurt the long-term bond holders. But this is something we're kind of looking at long-term. When you start hearing talks about price controls, if they have price controls, why can't they have bond controls? Why can't they just say, hey, you're only getting half of what we said in your bonds? You never know what these people are going to do. And so over time in the future, we're still looking at corporate bonds. Interestingly, you're not getting paid much for investing in corporates over treasuries, which is very unusual, which I think is people are seeing some of that type of stuff. So I think this is something that we're going to want to continue to watch. But what I want you to understand is for your retirement, you have to understand that these inflations tend to be long-term trends. Is it going lower? Yeah. But you have to continue to protect. Inflation does huge damage long-term to retirement plans. We're talking 25 years for retirement. You got to look at Monte Carlo simulations and stuff to see how it's going to last. But if you put the inflation numbers in, let's put 4 or 5. Well, understand because that's what the inflation number is now at maybe 3%, 3.1%. Well, understand your real inflation rate is probably, quite frankly, closer to 4.5% because of the hydronic adjustments, because of all the way they've moved. Instead of having the building in the cost of the house to buy, they put the cost of the house to rent. All these little things, they kind of camouflage the inflation. So if you're using those simulations, understand you're not going to make it most likely. And so this is why you've got to protect yourself from that inflation. And so I think that's important. The other thing I want to remember is that this big crack in the market is very unusual from the Japanese carry trade, and quite frankly, it happened within 2 days. Started 2 days before Kamala was officially nominated the president. So, when you get when you get a crack like this in the market, as Japan fell the most in 19, that's not a one-off event. That's not something that's over in 1 or 2 weeks. So understand this move up is another opportunity to kind of reduce risk and understand if you're overweighted, and understand that we live in a very volatile world. We have 4 wars going on: the Ukraine-Russia war, the Israel-Iran situation, the China-Taiwan, what's going to happen there, and of course the climate war, which we're spending $750 to $800 billion on war. These are all expensive. They all damage your fiscal thing. They raise your debt. Our debt levels hit $35 trillion. So you have to protect yourself. So if you need some help, go to our website, maxoutsavings.com. We're writing our new report. We send out a free report once a month talking about savings investments, RMD changes, required minimum changes, all in the free Max Out Savings report. We don't call you. We don't bother you. Just go to maxoutsavings.com and sign up for the free report. It's maxoutsavings.com. You can also request an appointment, and I'll sit down with you by going to the website. And you can call on the phone 713-627-0400 and just leave a message. We're not there today, but if you need some help, I'd like to help you out. Go to maxoutsavings.com. Remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. You need to protect yourself and engage in risk management to protect your retirement and your future. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
The big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
AM 1070 and FM 103.3. The Answer.